Welcome back, traders. So, as we have indicated in our introduction, that this lesson is basically dedicated to the basic guidelines to trade trendline trading strategy. But before we go through our presentation, we have to read this disclaimer for Forex trading. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high level of leverage can work against you as well as for you. And then last, any information or advice contained within this platform is shared for educational purpose only, and it should not be considered as financial or investment advice. So traders, let's get straight to the presentation for today. So traders, as we have indicated, that this lesson is basically dedicated to the basic guidelines to trade trendline trading strategy. So firstly, we will start with a section whereby we have to so now firstly we need to discuss where are we supposed to place orders or positions. So where are we supposed to look for bearish positions? Where are you supposed to look for bullish positions? So we start to look for bearish positions, or we look for sell positions at the second lower high. We will show you what is the second low, what is the one lower high, and then we look for bullish positions or buy positions at the second higher low. So we look for sell positions at the second lower high. When we look for sell position or bearish positions or short positions, we start to look for short positions at second lower high. And then we start to look for buy positions at second higher low. Okay, moving forward. So there must be a reversal candlestick pattern on the connected points. So on the second lower high, we must have any bearish reversal candlestick pattern. On the second higher low, if we are looking for bullish position, so we must have at least one bullish reversal candlestick pattern, such as, so here are the most popular candlestick patterns or the reversal candlestick pattern. So the first one is doji. So it's bullish or bearish engulfing pattern, passing line, hammer, shooting star, morning star, evening star, etc. And then we also have a course which is dedicated to candlestick patterns alone. So we will not go through them in this section, but we also have a course which is basically dedicated to this section. Now moving forward, you must also look for resistance and support, or demand and supply zones. So you must look for levels or zones. When we talk of levels, we talk of resistance and support levels. When we talk of zones, we talk of demand zone and then the supply zone. So let's start again. To summarize the basic guideline, firstly, we sell at the second lower high. We buy at the second higher low. Sell, second lower high. Buy, second higher low. Secondly, we must look for reversal candlestick patterns on the connected points. So on the second lower high, we must look for any bearish reversal candlestick pattern, such as doji, bearish engulfing, dark cloud cover, hammer, morning star, evening star. And then when we look for bullish position, so we must look for bullish position at the second high low. And then we must also look for any bullish reversal candlestick pattern, such as a bullish engulfing pattern, or a doji, or a passing line, or a hammer, or a shooting star, or a morning star, etc. And then moving forward, we must also look for resistance and then support level. Basically, we look for resistance level when we sell. Basically, we look for support level when we buy. And then basically, we look for buy positions when the price is within a demand level. We look for bullish, so we look for bearish setup when the price is within a supply level. And then we also have the course which is dedicated alone on the demand level. Demand levels, traders, are very important to understand in the trading because they are the key to find best entries in the trade. So moving forward, traders, so those are the basic guidelines to trade this strategy. Now let's move forward to the examples. So here is the example to look for bullish position. So firstly, we have this starting point. So we have this bearish trend line coming downward, and this bearish, it's ended here. Then the price starts to make high, then higher low, higher high, higher low. So we have this first higher high, second higher high. So we have this first higher high, first higher low, second higher high, second higher low. So on the second higher lows, because we have this starting point, we have this we also have this first higher low, and then now we have this higher low. So on this higher low, we start to look for we start to look for we start to look for bullish patterns that will indicate or will give us the signal for bullish positions. Firstly, we must look for any bullish reversal candlestick pattern. Let's look for bullish reversal candlestick pattern. Here we do have a bullish reversal candlestick pattern, which is a bullish engulfing. As you can see, this strong bullish candlestick pattern, which is what this was the indication of a bullish trend. Second, we must look for the zones or the levels. So let's look. We do have a support level 1, 2, 3. So this is the third point. It started here, tested once, tested twice, and then on the fourth time. So now it's going up. So we also have the level, and then so those are the three categories that we're looking for. Now we're moving forward. Then the price went up, so you're in profits already. The price moved out, and then the price starts to trace again, and then the price tested this level again. Tested this trend line again. So at this level now, you look for bullish reversal candlestick pattern. Let's look for bullish reversal candlestick pattern. Yes, we do have a person line. We do have it. So this is the first thing. Second, let's look for zones. Here we have the support level 1, 2, 3, 4. We're moving up. So we do have a support level. Now the price moves up. Then the price make another higher high. Then the price make another higher low. Then on this higher low, we also have this bullish engulfing reversal candlestick pattern. That is the first thing. Second, we have, let's look for zones. We still have this resistance level, this support level. So 1, 2, 3, 4, 5. Tested again, then it went out. So that is how we trade long positions, or that is how we look for bullish positions when we trade trendline trading strategy. Okay, so when you use trendline trading strategy, when we buy, firstly we look for firstly we have to find it. We start to buy S from the second higher low. Secondly, we must look for bullish reversal candlestick pattern, and then we must look for support or demand level. So now after this, then we can execute a bullish trade. Now moving forward to the next slide, let's see what we have. So then on the next slide, it's where we teach you how to execute short positions. So firstly, the price came here and then start to make lower low, lower high, lower low, lower high. Then on this second lower high, then you start to look for bearish patterns. So firstly, we do have a second lower high. Now let's look for bearish pattern. Bearish reversal candlestick pattern. So we do have this bearish reversal candlestick pattern, which is a bearish engulfing candlestick pattern here. And then let's look for zones. We do have a supply zone. So we have this. We do have this drop. Then we have this base. Then we have this drop. So this is what this is called a supply zone, which is drop, base, drop. So we do have this demand zone. And then after that, the price went up. Then the price came back again. The price, we have this lower high again. Then let's look for bearish engulfing. Sorry, the bearish reversal candlestick pattern. Yes, we do have a bearish engulfing candlestick pattern. Let's look for zone. We have this support level 1, 2, and then this support level was broken. Then the price came back again. Then turn this support level to the resistance level. Then the price went down again. Then moving down, the price make another lower low. Then the price came back again. Then we have this 1, 2, 3, 4. So now this is the fourth lower high. So on this fourth lower high, let's look for bearish reversal candlestick pattern. We do have this long wick, which is the indication of a doji. So we do have a bearish signal. And then second, let's look for zones, or let's look for what we call, let's look for all the zones or the level. So we do have this drop, base drop, and then the price violated this liquidity, then take out these orders, then the price came down again, then make this lower low. So that is how you were supposed to execute the bearish trade. So firstly, when you execute a bearish trade, we start to look for bearish positions as from the start of the second lower high. Then after that, you start to look for bearish positions. Then after that, we also look for bearish reversal candlestick patterns. Then after that, we look for resistance, or we look for what? We look for demand zone. Then after that, you can execute the trade. So traders, that is the basic guidelines to trade what? To trade trendline trading strategy. So let's just summarize them. Firstly, we said S from second higher low, so lower high. Then we buy S from second higher low. Then we must look for reversal candlestick pattern. Most popular candlestick pattern are doji, engulfing pattern, person line, or dark cloud cover, hammer, shooting star, morning star, evening star. And then we must also look for resistance or support level or demand or supply zone. Then after that, you can be made execute a trade. So traders, this is all we have for this lesson. So on our second lesson is whereby we discuss the different types of trend lines. So thank you traders for watching. I will catch you on our following lesson.